every once in a while it's great to go bottoms up, I think, honestly, because with everything swirling around the macro, we can't gauge. We're not in a position to know how some of these things play out. And good, solid companies that are doing things every day to advance their business and raise revenues and manage expenses, maybe that's the way to go. Can you help us with that today?
Absolutely. And if you kind of think of where we are in the market, S&P's up 15%,
yeah,
fairly valued. So let's look at kind of a sector or stocks that we think have some appreciation. So look at the healthcare sector. Did very well last year in the down market. This year's only up 3%. And if you do bottoms up, a couple companies like Zimmer in the orthopedics.
Zimmer, there's one. So are you making a call on Zimmer?
I'm making a long-term call, a call to own it now for the next couple of years. It's out of favor, trades at 15 times earnings. It's, in the knees, hips, shoulders. It's got a lot of runway. And if you look at demographically, not just in our country, but overseas, this is where money's going to be spent. And they've already been feeling pricing pressure. So this is not something that Medicare for All is really going to hurt them. This is a company that is self-help, trades at a multiple below its competitors. And I think there's some opportunity.
Why do they trade at a multiple below their competitors?
Well, they made an acquisition about a year and a half ago that hasn't turned out as well as they thought it was. So the market's really put them in the penalty box. And if you look at kind of the long-term growth of this area and a new CEO in place, it's really kind of the value opportunity of a company that has some good products.
I look at a lot of these guys, and the orthopedics companies had issues with the Affordable Care Act because they were heavily penalized. They didn't go along from the get-go. Now the concern's really about drug prices. But is there anything that pops up in regulatory land that makes you worry about these, or do you think these guys finally get to skate below the radar?
I think they've already felt negative pricing year on year. 5% of spending in healthcare is on med tech. So there's an opportunity here for them to kind of, quote, escape underneath all this rhetoric and also prove that they can actually increase earnings and use technology. And that's another part that we like this company, because technology really helps them with productivity and international growth. So I think there's an opportunity there.
In a slowing economy, which obviously we're not seeing that, we may at some point, but these, for some reason, people do put off some of this surgery in slower, but you don't foresee that.
Well, I think when you've got issues with your hips and knees and you get older.
Why are you looking at me? And how do you know?
Because you asked.
Do I limp around like that? You see me go upstairs.
It's also the golfer's problem.
It is,
right?
on the left side.
So as people get older, they want to be more active. And this is also an international play. 40% of their revenues come from overseas. So as people are more coming into middle market, that's kind of an area you want to do.
All right, let's talk X-ray. That's a symbol. Dentsply. It's up 48% already.
Yeah, it was down 50% last year.
Oh, okay.
Okay. So 1/3 of all dental expenses are cash pay. So if you look at kind of where dental is going, again, using technology, and also, by the way, insurance doesn't play a big part of dentists as well, because people will go to the dentist when they need it. Now, in a slowing economy, yes, things will get put off. But another turnaround story, company that's got global exposure, a new CEO, in an area that we don't really need to watch kind of what's going on in macro land, whether, GDP is going to be.
Although it seems like you've got a real age, a demo story in all your picks today. And then you got Bristol Myers, too. But these are all in an aging population. It would seem that this is that your biggest macro factor in this, or not necessarily?
I think macro factor in the sense that this is also undervalued sector, out of favor. Bristol's down 11% this year. They're not getting any credit for the Celgene acquisition that's about to happen. Huge cash flows coming, oncology products down the pipeline, which people are not giving them any credit for. Basically saying, hey, guys, you got to prove that these stocks are going to work. I like the Bristol story just because it's not a Me Too story. They're not making similar drugs to what are they out there already. And if any of these new drugs come on, the stock could really reflect it. 11 times earnings, very solid dividend as well. And a lot of costs there, too.
So it's not necessarily the aging, but all healthcare. And healthcare is, you think this is worries about the 22 Democrats?
There's been so much negativity on this sector that if you're going to look for opportunity in the market, especially with turmoil going on with tariffs and you're going on with global geopolitical issues, this is a part that I think investors can, in the next couple of years do well on. And then we can also invest in the other sectors. But I think if you're looking for opportunity out of favor, here are a couple of stock picks that I think.
Bristol Myers, you don't think gets hit by any of the regulatory drug prices?
I do, but it's, at 11 times earnings, you're buying something that's pretty heavily discounted already. And again, if it's not a Me Too drug, I think people will pay for these drugs as well. So you're definitely going to have some of that.
What do you mean, Me Too drug?
Meaning they're not copying what else is out there. These are drugs that are distinct in what they're doing in oncology and in the cancer area.
Andrew, you're reading the journal now, which is good. So I know that. But I also asked you to start reading Drudge? Did you start looking at that, or you didn't see this today?
You know what? I love the Drudge Report.
Okay.
I read it every day.
Okay, the reason I bring it up.
I don't read Breitbart.
Okay.
Like
well, you
do.
should. But the reason that I bring it up is the top story on Drudge on the left. And it's a CNBC piece by Tom Frank. Okay. It's one of the top stories. Human lifespan could soon pass 100 years thanks to medical technology. And that's from a B of A analyst report about genomics and the strides that are being made and some of the really preventable things that cause quality of life and length of life.
Alzheimer's?
All those things could be affected to where we are routinely pushing it past 100. Now, I don't know if you can...
You know what that means?
Well, I was going to mention, Andrew, I don't know if you can anchor a show past 100, but it's something to think about
that
if you're
means
for your
start
future.
listening to Sarat and others because you're going to need a lot more money.
Well, that's what I'm talking about. And also for knees, and
knees,
also for
hips, shoulders,
teeth. Yeah,
and
for
also
all the
drugs
things
to
that you're
keep
talking
it going.
about.
And 60 is the new 50, and as people get older, they want to be
the new 45, I think.
You can't retire at 65 and live another 40 years.
Right.
So you need to work longer if that's.
So you need to take care of your body, and you also need to invest.
Take care of your mind.
Yeah.
And we do the jumble. We do the jumble every day.